Hello and welcome to this March edition of Property News. Today I'm going to give you an update on the UK economy, talk about what's happening right now in the property market and give you some real investor insights for the next few months. So my name's Tony Law from Your First Four Houses. My channel's all about helping you replace a job-based income with just a handful of investment properties so that you can give up the day job if you wish and go and do something more interesting with your life. If this is your first time here, be sure to subscribe to the channel and click that bell notification icon so that you don't miss out on any of the free content that I give you each and every week. So first of all, I'm so sorry, it's a little bit of a late update this month. It all comes down to us moving to our new home in Bristol. Everything's a bit up in the air, so I do apologise. So let's start off by looking at the economy because let's be honest, it's a huge one this month, isn't it? On the 3rd of March, we had the budget and there were some really big announcements in there, many of which you may already be aware of, but let's just quickly skim through some of these. First of all, furlough, as I'm sure you know, has been extended until the end of September, with employers actually needing to contribute 10% in July and 20% of the furlough payment in August and September. Also, support for self-employed workers has been extended up to September, with 600,000 more self-employed people eligible for some grants. And if that might help you, I'll put some links to those in the description box below. Unemployment is expected to peak at 6.5% this year, which is actually much lower than the 11.9% that was previously predicted. There is no change to income tax, national insurance or VAT this time around. However, corporation tax above £250,000 is set to rise from 19% to a whopping 25% in April 2023. But let's be really honest here, this is actually unlikely to affect the majority of those smaller property investors out there, maybe with just a few properties. A small profits rate is actually being introduced, which may have more relevance here for limited companies. This actually maintains the 19% rate if profits are below £50,000, which I reckon means 70% of companies, or 1.4 million businesses, should actually be completely unaffected by this corporation tax change. Now there's some really interesting tax breaks that were announced in the last budget for firms to unlock £20 billion worth of business investment. Basically, firms can deduct 130% of investment costs from tax bills. And believe you me, this is something that Liana and I are looking into right now. As always, you need to speak to your accountant about this and ideally make that a property savvy accountant. I have to say that on the whole, I personally felt that the budget was a fairly positive one with some really interesting twists to it. In 2020, the economy shrank by 10%. I'm sure you're already again fully aware of that, but it's actually now set to rebound in 2021 with a predicted growth rate of 4% this year and 7.3% in 2022. With everyone being vaccinated by the summer, with COVID cases dropping, and I think we would all agree, a genuine sense that we're starting to get a grip on the situation. Does it feel a little bit like we're easing back to normality? Goodness me, I hope so. Needless to say, we still have to face up to the enormous financial costs of the pandemic, but I honestly feel that this budget kind of supported businesses first and foremost, which I think it had to do. And I kind of think that in that way, for those reasons, the budget was very successful, again, in my opinion. The only thing I was really surprised about was the pitiful pay rise that was offered out to NHS workers, but maybe it's best if we kind of leave that can unopened. By the way, if you're finding this video helpful, it would just be awesome if you could click on that like button down there. It really helps me if that's okay. So let's move on to property. And first, the really huge one, which of course is that stamp duty holiday has been extended to the 30th of June, which means I would get to win my £10 bet because I actually predicted that they would extend that stamp duty holiday over 4 months ago. So at least I got that one prediction right. After this, the starting rate for stamp duty will be £250,000 up until September, and after that stamp duty will then resort back to its usual level of £125,000. After 3 months of falls in house prices, the average price of property coming to the market actually increased by 0.5% in February, and the number of new buyers continues to grow. In fact, there was actually 18% more inquiries in February of this year than there was in February of 2020. But perhaps that's unsurprising considering when the data was compiled, i.e. before we knew about the stamp duty holiday being extended. However, the number of new sellers coming to the market is actually down 21%. And interestingly, it's particularly noticeable with family homes. The question is, why is that? Well, the general sort of school of thought is that it's because of homeschooling. If it's a family home, people are focusing on making sure that their homeschooling requirements are met. And of course, that has to come above everything else. So that was an interesting reason as to why perhaps family homes have not been coming to the market. In fact, 1 in 5 buyers, this is an interesting statistic, who actually agreed a purchase on their property last July have still not completed on the sale. That absolutely astounded me. The government has announced a new mortgage guarantee scheme that will increase the availability of 95% loan-to-value mortgage products, enabling more people to access mortgages without the need to put in really huge deposits. And again, I'm going to put a link in the description box below that might be of help there. I think you all know that my view on very high loan-to-value mortgages is I don't particularly think that that's what you should be doing, but I do recognise that for some people, raising 5% is absolutely as far as they can go. So hopefully those links might help you. The government has introduced a new £1 billion fund to promote regeneration in 45 English towns. These include Middlesbrough, Preston, Swindon, my old town of Bournemouth, Newark, West Bromwich and also Ipswich. And the other thing is that the first 8 sites have been announced for free ports in England. These are East Midlands Airport, Felixstowe, Harwich, Humber, Liverpool City Region, Plymouth, Solent, Thames and Teesside. But you may be asking yourself, what exactly is a free port? Well, free ports are areas usually located around shipping ports or airports. Goods arriving into free ports from abroad aren't subject to the tax charges called tariffs that are normally paid to government. These taxes are only paid if the goods leave the free port and are moved elsewhere into the UK. So let me give you a few quick investor insights. I want to make it clear these are just my personal views though, and I may well be wrong. As always, you've got to do your own due diligence on not just this stuff, but everything that I've been sort of sharing today, and make your own decisions, especially when it comes down to any deals that you may be looking at. So the first investor insight that I'd like to share with you is if you live in a regeneration area, or in a free port area, I think one of the first things that you should be doing is going out and studying your local plan, which you can get from the planning office, to see exactly where any of these regeneration sort of plans are going to be put into place, because that may well really scream out to you where you should be buying your next investment property. Next, with no increase in capital gains tax, because they were talking about increasing that quite substantially, and a continuing strong market, I would like to ask you, is there maybe a question that you should be considering selling off 1 or 2 properties that you may already have, assuming you're already a landlord, that you don't want? Maybe now is the time to do that. I think a property crash, if I'm being honest with you, in 2021, I think is actually now quite unlikely. Although, as I mentioned last month, I will still maintain I think that house prices will probably soften, and that was the phrase that I used last month, wasn't it? I think the house prices will probably soften as we move into the back end of this year. And this is obviously because we have extended the stamp duty holiday. And lastly, if you haven't already done so, can I encourage you to check out my completely free mini course? I'll put the link here. This will teach you exactly how Liana and I built a small but profitable portfolio without needing to put loads of money into each and every deal. And honestly, you might find one of the 2 key lessons in here really helpful to you on your property journey.